Welcome back everyone, and in this video, we're going to discuss a young tech IPO that I just bought in my high risk, high reward growth stock portfolio. This stock just hit the public market this week, and I bought into the company during their first trading session. They are a tech firm that operates in the food industry, and their current customers include some of the fastest growing restaurant chains in the country. And the company is named OLO. They power on-demand restaurant commerce by enabling digital ordering and delivery on an open software as a service platform. And over 400 multi-location restaurant brands are using OLO to manage their digital channels. And this pandemic has completely shifted consumer behavior in a way that benefits this company. In-person dining is shut down in many parts of the country, which has led to a surge in demand for digital and mobile ordering platforms. And I believe this is an industry that will continue to expand over the next decade, so I decided to buy shares of OLO on the day the company went public. And this was the first time I ever bought shares on the day of a company's IPO. So you can see the company trades under ticker OLO or OLO, and I purchased 10 shares at an average cost of $30.17, and only one day of trading, I'm already up over 15% on this position. And when OLO went public, they priced their shares at $25 each. And after the first trading session, the company absolutely exploded, up 39% in their first trading day, and they closed at over $34 per share. So a massive expansion on the first trading day, and the company's market cap is at just below $5 billion. And I bought in just around 1:30 p.m. for a cost just above $30. And we can see the company closed out their first ever trading session with a massive surge and finished at $34.75. And in this video, we're going to take a look at OLO as a whole, go over the company fundamentals, their IPO filings, and their future growth potential. But first, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. And we also track the progress of my personal stock portfolios, where I have one that is focused on high risk growth companies and SPACs, and another that is for my long-term financial freedom, where I invest in blue chip dividend paying companies. So please hit that subscribe button so you don't miss any daily videos. And in this episode, we're going to take a look at OLO, the company that is powering millions of food orders for companies all across the country. And the name OLO actually stands for online ordering. So the company definitely has a very interesting name, but I believe it's easy to remember and catchy. And this brand operates one of the leading software as a service platforms for on-demand restaurant commerce. And if we take a look at some of the key highlights, the company was founded back in 2005, so they've been around for a long period of time, and their platform now services over 400 multi-location brands that reach 64,000 restaurants. And every single day, they have an average of 1.8 million orders that they manage for their different customers. And in 2020, OLO's top line revenue grew 94% year over year, and they maintained a very high gross margin of 81%. And the company's operating margin came in at 16%, and in the 2020 fiscal year, OLO was actually profitable. And when young tech companies go IPO, most of them are losing millions, hundreds of millions, or even billions of dollars each and every year, but OLO is one of the few tech companies that hits the public market with positive net income. And we can see they operate and they service customers in every single area of the restaurant industry. We have fast casual, casual dining, family dining, coffee and snack, and quick service. And some of their top names include Five Guys, Wingstop, Shake Shack, Chili's, Applebee's, The Cheesecake Factory, Denny's, Dairy Queen, and many more. So some major restaurant chains are already using OLO to service and facilitate their online and mobile orders. And OLO's platform operates in 3 core modules, which are ordering, dispatch, and Rails. Ordering is a fully integrated white label on-demand commerce solution that enables the consumer to directly order from and pay restaurants via mobile, web, kiosk, voice, or any other digital channel. And then we have dispatch, which is the fulfillment solution that enables the restaurants to offer, manage, and expand their direct delivery to those consumers. And finally, the third module is Rails. This is a channel management solution that allows restaurants to control their menu, pricing, location data, availability, and directly integrate and optimize orders through third-party POS systems. So all three of these modules combined help power the delivery channels for some of the largest restaurant chains in the country. And now we're going to examine OLO's financials, and we'll start off with their income statement. So we can see the top line revenue is growing at a significant rate year over year. Back in 2018, the company generated around $31.8 million of total revenue, then $50.7 million, and then finally in 2020, they set a record high, generating over $98 million of total revenue, which is absolutely incredible. And if we take a look at their bottom line or their net income, in 2018, they posted a net loss of around $11.5 million. Then in 2019, around an $8.2 million loss. And then in 2020, the company was actually profitable with over $3 million of total net income, which is a great sign. Young tech companies do maintain high margins, but a lot of them still burn through a ton of cash each and every year. So the fact that OLO is already profitable with only $98 million of total revenue really makes me feel confident that as time goes on and the company continues to expand, they'll be able to fund their own growth with their profits rather than issuing hundreds of millions or billions of dollars worth of debt at a very early stage in their development. And of course, the company will still have to sell shares, will issue some debt, but I don't believe it'll be at such a scale like some of their other competitors do when they first go public. And now if we take a look at OLO's balance sheet, we can see that at year end, December 2020, the company had around $75 million of cash and total current assets of $125 million. And if we compare that to their short-term debt at around $72 million, they have a current ratio nicely above 1.5, and over the next 12 months, OLO's not going to have any short-term liquidity issues. And we can see the company has total assets of $134 million compared to total liabilities of only $75 million. And we can see $72 million of short-term debt while total liabilities is only at 75. So they average around 3.1 million of long-term debt on the business, which is extremely low and is very strong. I'm a big fan of young companies who don't take on debt too early because debt payments can really hurt your cash flow as you're trying to expand. So overall, I think OLO has some very strong financial statements. I think the income growth is incredible. I think the balance sheet is strong. And from their IPO, the company will generate around $450 million, which will be a very nice cash influx to fund their future growth over the next few years. And I decided to pull the trigger and buy a few shares of OLO for a couple different reasons. The first is that I really like the sector that the company operates in. I think digital and mobile ordering for restaurants is only going to expand each and every year going forward. I think it's only going to get bigger, and as time goes on, every single restaurant is going to need an improved software service to help power and manage these online deliveries as they continue to grow with faster scale and more efficiently. And I really liked that even as a smaller company, OLO was already powering the digital channels of some major restaurant brands that are expanding at incredible rates, including Five Guys, Wingstop, and Shake Shack. These are some of the fastest growing markets that are expanding their locations each and every day, and the fact that OLO is powering these major brands gives me some reassurance that they can handle the big time and some of the multinational and leading names in our restaurant industry. And I was also already looking for a new addition to my small growth portfolio, and when I saw OLO come across the screen, I thought it was a perfect match. This is a smaller portfolio that I use to invest in more high-risk stocks that have the potential to double or triple over the shorter term. And these are primarily SPACs or freshly IPO'd companies that are still early on in their growth and development, aren't well established, and although there is higher reward, they do come with a lot more risk. And this is a separate portfolio. I keep it away from my dividend holdings, and having it allows us to go after some short-term capital gains. And I also use this portfolio to keep track of some of the companies that you guys have been requesting down in the comments that you want me to talk about. And I buy a few shares, keep them in this portfolio, so over a couple months or years, we can track the progress of each name and hopefully get some nice rewards as the companies continue to grow. And overall, this portfolio value is only $3,200 and is well below my main portfolio that comes in at over $89,000. So my plan for the smaller portfolio is to keep it at max 10% of my overall stock portfolio. And I am still looking for a couple more additions to this portfolio. So let me know down in the comments if you have any SPACs or small cap names you want me to take a look at and discuss on the channel. And now we're going to wrap up the video. In this episode, we took a look at OLO, the young company that just went IPO and absolutely exploded on their first day on the market. And they operate in the restaurant industry. They have a software as a service platform that manages the digital channels for some of the largest restaurant brands in the country. And I purchased 10 shares of OLO on their first trading session with an average cost of just over $30, and I'm already up over 15% on my position at this current point in time. So thank you for watching to the end. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy, and any major market news. So please hit that like button, subscribe for the daily videos, and I will see you in tomorrow's episode.